Sustainable investing has been gaining a lot of interest globally. In fact, what we've been witnessing is increasing flows in sustainable funds, ESG funds, and the COVID-19 pandemic was only an accelerant in terms of getting more and more interest from global investors looking at sustainable investing for their portfolios. In fact, we recently did a global study which pointed out that quarter on quarter since March 2020, we've seen increasing flows into global sustainable and ESG funds, and in fact, the AUM now tops at about 2.2 trillion US dollars for sustainable funds globally. Now in India, obviously, it's still a fledgling industry, and we recently did a study, what we call an inaugural ESG landscape report, to look at how do ESG and sustainable funds in India, options for Indian investors, what is it, how is it being kind of scoping up. So let's talk about some of the findings for a very exciting space for us in the Indian ESG sustainable landscape space. So currently, when you look at the assets that are available or the funds that are available for Indian investors, like I said, it's still an upcoming industry, upcoming space for Indian investors. But we have 11 India domiciled sustainable funds, out of which 9 are kind of investing in India, 8 active with 1 passive ETF, and also fund of fund that feeds into it. And we have 2 global feeder funds, which feed into global sustainable funds, which are more sort of thematic, in their context. In fact, the interesting bit is that when you look at the data from an Indian perspective, the first half of 2021, as of June 30th, what we saw was that the assets in Indian domiciled sort of sustainable funds grew to close to about 12,000 crores, which is actually a pretty interesting or exciting growth number of about 27% YTD. And over the last year, assets have grown over 184%, albeit obviously on a small base, right? Now, while some of this is obviously attributed to the markets moving up, how the equity markets have gone, but a significant share of that has been due to fresh inflows into funds, in fact, into new fund launches that have come over the last 1 year, right? And we all know that the first real sustainable fund was launched about 3 years back, where SBI repositioned one of their funds, and then we obviously had some other strategies that were launched through 2019. But 2020 was really the time where we saw a lot of action on the sustainable investing landscape for Indian investors. When we just break down the assets, how we look at it, active funds still rule the roost when it comes to sustainable funds, almost 93.5. So a substantial portion of the assets are in the domestic sort of space, are in actively managed funds, with only 1 passive fund offering, which is the Mirror Asset ESG Sector Leaders ETF, and obviously the fund of fund that feeds into that ETF, right? But a significant chunk of the money is in actively managed sustainable funds as of now. The other interesting bit is that it is a top-heavy market, like we've seen with most other categories. The top 5 funds account for almost 87% of the overall sustainable fund assets. Obviously, these are small fund numbers, but the trend is something that we're very closely watching, right? We spoke about product launches, and we said that 2020 globally has been a very interesting year, because what we've witnessed is that obviously Europe has been at the forefront of sustainable investing, but even US, which has been lagging behind for a very long time, is really picking up a lot of steam. Also parts of when you look at Australia or Southeast Asia, we've seen 2 things happening. One is there's been a flurry of sustainable fund launches. There have also been funds that have been repositioned with a sustainable mandate, and flows have been increasing in this space quite rapidly. And what we saw in India was no different, because it was kind of the start of the sustainable investing journey for Indian investors. But we saw a total of 6 fund launches in 2020. In fact, 5 of them came in the last quarter of the year. So far in 2021, it's probably been relatively more muted. We've seen 3 fund launches, 2 of which were actually global feeders into global sustainable funds. And the last quarter actually just saw 1 fund launch, which is more thematic one, which is the BNP Paribas Aqua Fund of Funds, right? So we think this activity, as asset managers look at this space more keenly, and a lot of them are already doing it, we will see more interest and more fund launches coming in. But let's look at how the fund flows have been on sustainable funds, right? So we spoke about 2020 was a great year. But when we just break it down into a quarterly basis, and again, mind you, this is it's a very small set of data that we're looking at. But the one thing that really stands out is that flows have been largely driven by, the new fund offerings or the NFOs, where investors have obviously invested in an NFO of an ESG fund, but follow-up flows into these funds have been quite limited. So essentially what that has kind of resulted in is, when you've had quarters with large new fund offerings, you've seen significant flows come in. But then again, there have been quarters where there haven't been too much flow. So for instance, the last quarter of, which just went by as of June 30th, 2021, we just saw a very meager 26 crores come in into the overall sustainable investing landscape, these 11 funds that we track. Whereas the previous 2 quarters, and that's a significant slowdown from when we look at the previous 2 quarters, where we had about 1,200 crores come in the first quarter of 2021. And the last quarter of 2020, those 5 fund launches resulted in almost 3,750 crores come in terms of net inflows. So I think that's a trend that, I think the space will evolve, because largely it is still driven by new fund offerings. Investors are, using it more as a thematic fund rather than, a very core holding necessarily in their portfolios. And, this will obviously, require a lot of engagement with local investors and, so we're still some time away from, regular flows coming in. But, the exciting bit is that there are options available for investors and, good, well-managed options available, right? Which brings me to, interesting bit about how do you gauge that, is a fund actually following a sustainability mandate or not? Now, Morningstar, is obviously, we've been at the forefront of, doing everything, which is linked to sustainability and ESG research. We own a company called Sustainalytics, which is actually one of the foremost leaders in terms of stock level ESG research. And what has enabled us to do is produce what we call the Morningstar Sustainability Ratings for funds. This is very similar to, so we have 5, globe rating of these funds, and the funds are denoted from 1 globe to 5 globes, 5 being the best and 1 being the worst. What does the globe denote? The globe denotes is that how are the underlying portfolio holdings. So we spoke about Sustainalytics produces risk scores on individual companies. The lower, the better in that case. Any portfolio that we have the underlying research on the company, we can roll that up to a fund level rating, which is basically a simple, when you look at it, a weighted average score of the underlying portfolio risk scores. Like I said, the lower, the better. All the funds are put within a peer group, in this case, Indian equity funds. And then you would look at the funds which are, which have the lowest risk scores and assign them the highest rating, in this case being 5 globes, which, the top 10% funds would get, and the bottom 10% would get a 1 globe. And the good part is that, the funds that we have, the 9 domestic funds that are available currently to an Indian investor, 7 of these funds get a 5 globe rating, which is the best rating, obviously, on a peer relative basis, which tells you that, the funds that are saying that they have a sustainability mandate or an ESG mandate are clearly, relative to their peer group, seem to be following, a much better, and the underlying risk, ESG risk embedded within the companies is either lower, or the company management is a lot of work to mitigate the ESG risk that exists for them. So 7 of these, which is about 85% of the assets, have a 5 globe rating. And, I would urge investors to actually go to our website and look at the ratings of funds, not just for ESG funds, but you can look at it for any diversified equity fund, which will give you a sense of what the underlying sustainability rating for each fund is. So I think, it's still early days, but we've made a good start. Asset managers are, increasingly, a lot of them are looking at it not just as a product or a thematic approach, but integrating ESG, the various tenets of ESG, which is environmental, social, and governance, into their investment processes. It's still an evolving process, but we think we've made the right steps. We made those initial steps, and there will be more and more action, on this in the years to come. So we really look forward to investors looking at ESG as an overarching theme within their portfolios rather than just a thematic based approach.